U.S.-China trade tensions appear to be throwing cold water on Bitcoin's rally. Digital gold is down 13.8% from a high it just hit in October. That high was $126,894. Right now, we're all the way down to $107,967. Risk aversion has crept into this issue. Macro fears and institutional ETF outflows are weighing on the cryptocurrency. Is Bitcoin still a so-called safe haven amid geopolitical certainty? Here to weigh in is a guy who has been a crypto acolyte, early backer of Bitcoin and blockchain startups, and CEO of Bitcoin native financial services firm Professional Capital Management. Pomp, I'm not sure it ever was a clear-cut safe haven. And I say that because sometimes it would zig when the other areas that should be zagging weren't. You know what I'm saying? I mean, today, for example, it's not the safe haven. Gold and treasuries are at the moment.
Well, I think that first we got to define what's a safe haven. And for hundreds of millions of people around the world, Bitcoin is the safe haven because it's the only asset they want to take their hard-earned economic value. They want to stick it into Bitcoin and they never want to sell it. They want to pass it on to their kids or their grandkids. And the whole thing is that Bitcoin incentivizes long-term thinking. Now, that doesn't mean that gold or other assets don't do the exact same thing. But what I think you're seeing is a generational trend where young people want a digital asset. Gold is an analog version of sound money principles. Bitcoin is the digital version. And so what I believe is going to happen is that sound money principles, that debasement trade, is going to continue to be very, very popular in the coming years because people realize that they're never going to stop printing money.
Where are the buy on the dippers right now? Because Bitcoin ain't seeing it at the moment.
Well, here's the thing is if you go back to November of last year, right? So about 1 year ago, Bitcoin was at like $70,000.
Yeah, I know.
So it has still had incredible performance. If you go back to 2020, it's up 1,500%, right? So one of the things that I like to do is I like to take assets and denominate them in Bitcoin. So anyone can make money when you compare it to the dollar. The dollar only goes down. And so if you look at stocks, the S&P is up 100% since January of 2020. In Bitcoin terms, it's down 88%. So while stock investors think they're winning, when you compare it to a finite asset that can't be debased, they're actually down significantly. When you look at gold, similar story. Gold is actually up about 150% since January of 2020. But when you denominate it in Bitcoin price, it's down 84%. And so again, it kind of comes back to this idea of what is your hurdle rate? Are you trying to outperform dollars or are you trying to outperform a finite asset? For me, I think of Bitcoin as the hurdle rate. And as many people know the hurdle rate, if you can't beat it, I think you got to buy it.
What do you make of this anecdotal evidence that Bitcoin and crypto holders are actually using Bitcoin to now buy gold?
Well, one of the interesting stories I think happening in finance right now is Tether, which makes the USDT stablecoin, most popular stablecoin in the world. They've actually gone and tokenized gold, and they have this thing, I think it's XAUD. And when you look at that, they're basically saying in this digital world, people are still going to want all the same assets. They're going to want to have stocks. They're going to want to have Bitcoin. They're going to want to have dollars. They're going to want to have gold, etc. It's just they want to do it in the digital rails. And so I think that there's a lot of people who are looking at that.
Why the $19 billion liquidation in crypto assets last week? Can you just tell me, if you were sitting around a dinner table with a bunch of guys and women who are involved in crypto, and you've been doing this for a long time, they said, why do you think that happened? I mean, that's a chunk of change to see in one single week flee this area.
I think there's three things that happen, right? So first of all, is President Trump is very smart. He understands markets very well. There's a reason why he said what he said after market hours. So he waited for the stock market to close, and then he said this. Obviously, there's some after hours trading that happens, and you saw stocks trade down. But really, the only market that was open was Bitcoin and cryptocurrency. And that's where you went ahead and you saw that sell-off. Then Sunday night, he went abracadabra, let's make the market go back up. And he stepped in about an hour before futures open, and he went and he actually revived the market. And so I think that's a big part of it, is just he's doing things in hours where the stock market isn't open. The second thing is that you're starting to get some frothiness in the market. If Bitcoin's price is going up and people think Q4 is going to be really positive, as it historically is, average return in Q4 for Bitcoin is 60%, then people start to put leverage on. And so getting that reset is really important.
I know you long enough to know that you don't love putting in year-end targets and things like that.
Higher, Liz. Higher. We're going higher.
Okay. What about stocks as they pertain to the overall investment package? Tell me about the stocks that you invest in.
Yeah, so one of the stocks I've been pretty heavily involved in is Opendoor. And one of the things I really like about Opendoor is there's some macro trends. You obviously have interest rates coming down. That should bring back a lot of volume in the housing market. I think that's good. The second thing is there's a massive pain point, is that buying and selling a home in America is broken. And what that company has done is retail investors got involved. They held...
Very involved. If you stretch out this chart here, forget the week to date, folks. If you do a year to date or a 1 year,
it's crazy.
You see it's been nuts.
So what's I think very interesting about the Opendoor story is that the retail investors basically held their first activist campaign. They stepped into a stock. The CEO stepped down. Management committed to stop selling stock. They went and they got a new CEO who is the former COO of Shopify to come in. They've completely changed the culture inside that business. And they also brought back two of the founders onto the board of directors. So you have a macro tailwind in terms of interest rates coming down, housing volumes coming back. But you also now have a business that basically went from a bloated bureaucratic company to now you have tech leaders stepping in and saying, we're going to run this like a startup. I'll bet on that all day long. And so I think that the energy of the retail investors plus the changes in the business, something like Opendoor, is really exciting.
There is so much talk about whether this ramp up in massive spending in the AI space is a bubble. If it were, I'm not saying it is, but if it were, and the bubble had an interim pop and the market sold off, how do you think Bitcoin would behave?
I think that, first of all, in the AI space, it's really hard to create a bubble when companies like, Meta, $1 trillion business, are still growing 25, 30% year over year, right? So I think that's one of the things that we're seeing is there is very real growth, both in top line revenue, but also in profit of these companies.
But does the growth match the amount that they say they're going to spend? Mark Zuckerberg says he'll spend $600 billion in the next couple of years.
It all depends on your timeline, right? So from my standpoint, I'm a very, very long-term oriented investor. I think that every single one of these businesses is undervalued today because people are, it's the old Bill Gates quote, people overestimate what can happen in 1 year and they underestimate what can happen in 10 years. And so if you just think back since ChatGPT came out and changed the world, look at how pervasive it is. They have hundreds of millions, I think it's 800 million monthly active users. These things go at an accelerated rate today. And so if you look and you say, okay, 3 to 5 years from now, are these companies going to be bigger or not? It is very hard to make an argument that they are not going to be significantly bigger than they are today, which means they're likely underpriced compared to where they'll be.